All right, my dear friends, coming back to 3617, we were discussing bad debts. So let's discuss. So guys, for bad debts to be allowed as a deduction, there has to be two conditions. Condition number one, bad debt should have been written off in the books of accounts as irrecoverable, right? So basically, there should have been an entry already where they say I cannot recover the bad debts. Plus, it should have been taken into the accounts of into the accounts as a debt. So this is either 1 plus 2 or 1 plus 2. Two things. One is what? First condition is common for both, right? Bad debt should be written off in the books of accounts as irrecoverable. Second condition is what? It should have been taken into the accounts before. Or again, 1 plus this 2. What is 1? Bad debt should be written off as irrecoverable in the books of accounts, and debt should represent money lent in the ordinary course of business. So in the ordinary course of business, if I lend you money, that will be called as a bad debt. But technically, this 1 plus 2, where it is taken into the books of accounts, should be what is considered in 36(1). Because if you see, my dear friends, if the debt is represented by money lent in the ordinary course of business, for instance, if I say advance to supplier to bank and then bad debt to advance, have I taken it into the books of accounts? Have I taken it into the P&L before? No, it's as an advance. And this money have lent in the ordinary course of business as an advance. So will 3617 come here? No, 371 will come. When will 36(1) come? Only when it is debited to P&L account, right? So you have made an entry debtors to sales, and then you are making an entry bad debts to debtors. That time only 3617 you can definitely claim. So everything you can claim in these cases. So bad debt will be taken into account like that. So as far as construction contract also is the same thing. And when the bad debts, when you're recovering the bad debts, so basically what will happen? 41(1) deemed profit says whenever you have allowed an expenditure and when you're recovering the same, then it is taxable. For example, I had a bad debts of 1 lakh which I've written off in the books of accounts. Tomorrow that person comes and gives me that 1 lakh. Will I take it as an income under 41(1)? Generally yes, but I have one more specific section called 41(4). In 41(4) clearly they have mentioned that whatever bad debts you have claimed, if you get back, that has to be offered to tax. So 41(4) will override 41(1). Bad debt recovery will come under 41(4) and not 41(1). Apart from that, your predecessor and successor, amalgamating company, transfers all the assets to amalgamated company. Father, predecessor, what do you say, is now succeeded by his son or daughter. Demerged company under predecessor will be now successor will be resulting company. Firm is the predecessor and now company will be the successor, and partnership firm is the predecessor and now partners will be the successors of the same. In that be the case. Basically, the question is, I told you it should have been written off in the books of accounts and it should be taken in the books of accounts. So, predecessor may take it into the books of accounts, but the successor may write it off. Predecessor may take it in the books of accounts and write off also, but then recovery happens when the new person, when the successor takes it. So my father had bad debts of 2 lakh, he wrote it off also, then I succeeded the business, then that debtor came and gave me money. Should I take it into account? Is it taxed? These are the questions that they can ask in the exam. This we will discuss, but before that, what are the other terms of recovery? Provision for bad debts made in the books of accounts shall not be allowed as a deduction except for those engaged in banking businesses, as we have already discussed. Bad debts related to loan are not allowed. So if it's a banking business, for them it's normal business, right? So for them 36(7)(a) will come. But if you are giving normal advances that I showed you the journal entry, then for that 3617 will not come. Bad debts related to loan, I told you, are not allowed unless the SSE has a money lending business. Money lending business allowed under 3617(a) and 7. Yes. Then here, if the amount recovered, if the amount of debt is 25,000, bad debt which has been written off is 12,000. The debt due is 13,000. In that final settlement, I get 10,000 rupees. Again, further 3,000 rupees will be my bad debt. On the other hand, if the amount recovered is, let's say, 15,000 rupees. So basically, the debt due was 13,000, I have recovered 15,000. 13,000 I have recovered. 2,000 extra I have recovered. That 2,000 rupees extra will be my 41.4, which will be offered to tax, is what the section says. You see, 41.4 provides that for taxability of bad debts recovered which is written off earlier, bad debts so recovered shall be income under the PGBP in the previous year in which it was recovered. For example, A claimed total bad debt of 6 lakh. AO allowed only 4 lakh. 2 lakh was disallowed in the given previous year and the remaining 2 lakh was disallowed. In the subsequent previous year, 3.5 lakh was recovered. What was the allowed? 4 lakh. Right? Rupees 1.5 lakh. You see, allowed only 4 lakh, disallowed how much? 2 lakh. Now I have recovered 3.5 lakh. Guys, in that 3.5 lakh that I have recovered, what was allowed before? 2 lakh was not at all allowed. What was the extra portion that was allowed? 3.5 lakh minus 2 lakh, 1.5 lakh extra was allowed. So that 1.5 lakh will be offered to tax. Whatever was debited earlier, if it is credited this year, that only is taxed. If full 6 lakh was allowed and I am recovering 3.5 lakh today, then full 3.5 lakh will be taxable. But only 4 lakh was allowed, 2 lakh was not allowed. So 2 lakh was not debited in the P&L account, but today I am crediting 3.5 lakh. In that 2 lakh was never debited, so it will not be taxed. What is taxed? Only the extra portion. 1.5 lakh will be taxed. That is what it is. So if you see here, A sold materials to be on credit worth 12 lakh rupees during the financial year and offered the same as part of taxable income in 17-18. During assessment year 18-19, A writes off the same as bad debt. Full 12 lakh as bad debt. 6 lakh is recovered. 12 lakh was debited. 6 lakh is coming in. So what now? Full 6 lakh is taken as a, what do you say? Business income. Because I have not, what do you say? Recovered fully and I have allowed everything initially 12 lakh was allowed like that. Advances etc. made to raw materials etc. as a result of which advance is not recoverable. Bad debts cannot be claimed because bad debts were not taken into account only in the first place as already discussed. So predecessor is Mr. A, successor is Mr. A. There is no succession here. Debt was incurred by A, written off by A, recovered by A also. Then 41.4 says even if old business is there, discontinued by also under 41.4 that amount recovery will be taxable. Predecessor was A firm. Successor was B, partner. Debt incurred was A. Debt written off was A. Debt recovered was B. Who recovered the debt? B. Who incurred the debt? A. Who wrote off the debt? A. Who recovered the debt? B. So guys, in PK Kaimal case law, the Supreme Court said that since SSE is not the same, SSE must be the same in 41.4. Since SSE is not the same, 41.4 will not apply. Amount received by B is a capital receipt not taxable. Deadly. Amount received by B is capital receipt not taxable. Next. Predecessor is a firm. Successor is a company. Predecessor is a firm. Successor is a company. Debt incurred by whom? Firm A. Written off by whom? B Limited. Debt incurred by A. Written off by B Limited. Recovered. Right? Recovery here. If it is recovered, guys, if you see, taxable under 41(1)(b). In succession 41(1)(b), it is definitely taxable. And 36(1)(7) will apply even if the SSE will change. It will still apply Veerabhadra Rao, Supreme Court. Because guys, here it was taken into the accounts and written off by B and recovered by B. In the second case, incurred and written off by somebody else, recovered by somebody else. PK Kaimal says SSE who is writing it off and who's recovering must be the same. Hence, 41(4) will not apply. But in cases of succession, if it is incurred by somebody, written off by somebody else, and written off and recovered is by the same person as this example, written off by B Limited, recovered by B Limited, then 36(1)(7) will apply. These are the small pointers that you need to think about, guys. Important points. Then we have family planning expenditure under 3619. All the quick important things we'll do. Then the miscellaneous part we'll do later. If expenditure is capital in nature, 1/5 of that family planning expenditure is allowed. If it is revenue, then it's fully allowed. It should be incurred by the company, not firm LLP HF, and only with respect to employees, guys, not customers. That is all you need to remember in terms of family planning expenditure. And just like unabsorbed depreciation, unabsorbed family planning expenditure will be allowed to be carried forward indefinitely like depreciation. We are allowed to be carried forward indefinitely like depreciation. So now we will come to an interesting area, my dear friends, TDS defaults. TDS defaults 40 small a1, 40 small a1a. 40 small a2 is about income tax. Income tax paid will not be allowed. 40 small a1 and 40 small a2. TDS default. What part of the expense is allowed? What part of the expense is disallowed? Now, TDS defaults, let us see. This is all about it. That's all there is to it here in this. Other things we will see later, as I told you. Let's come to the 40 small a portion. Disallowance in terms of TDS. 40A1 speaks about non-residents. 40A1A speaks about resident. Very simple. Resident, yeah. So, what all is covered in 40A1, my dear friends? Interest is covered, royalty is covered, fee for technical services covered, and any amount chargeable is covered. That amount must be chargeable. For example, if I am an Indian SSE, I take some services from an US agent with respect to some order. I take services from US agent. Could I pay some amount to the agent? Yes. Will I deduct TDS on that? No, because agent does not have a permanent establishment in India. Agent is getting services outside India only and passing them on to me, and I am paying the agent money. For him, is it deemed to occur or arise in India? No. So, when his income is not at all deductible, can you say that TDS provisions of 40A1 will apply? No. That's why the Act uses the word any amount chargeable. So just because I make payment to an outsider doesn't mean this will be chargeable. Only those which are chargeable will be offered to, will be liable under 40A1. So 40A1, what all is covered? Interest, royalty, fee for technical services, any amount chargeable, right? Interest, royalty, fee for technical services, any amount chargeable. Any amount chargeable, right? So who all is covered? Persons outside India are covered and foreign companies covered. What were our heroes doing? Very smart fellows. They were paying to non-resident Indians when they were in India. Actually, NRIs are living abroad only. But this section said, if you are outside India and you don't deduct TDS, that expense only will be disallowed. So when that NRI comes to India, I used to pay him. And then said this section will not apply. Thankfully, they changed the law. They said outside India, then non-resident Indian, payment to non-resident Indian, and third one, payment made to a foreign company. Payment made to a foreign company. What is the component which is taken into account? TDS deductible component. Basically, the amount on which TDS should be deducted. And this does not include salary under 40A3. Guys, if salary is to be paid to a non-resident and if it is not deducted on time, even if there's a 1 day delay, full amount will be disallowed under 40A3. So 40A3 section will not come here because 40A3 is a specific section with respect to salary. Salary disallowance is immediate next day. 40A1 is different. What are the conditions that are to be taken into account? Conditions are what? One is something which is deductible but not deducted. TDS should be deductible but has not been deducted. Or TDS deductible, deducted but not paid on or before the due date. Got it? TDS deductible, not deducted. Second, or deductible, deducted but not paid on or before the due date under section 139(1). If it is not paid on or before due date under section 139(1), then what will happen, guys? It will not be allowed that year. When will it be allowed? Allowed in the subsequent year in which the default is rectified. That is where the tax is paid by the SSE. So how much is disallowed? 100% is disallowed. 100% is disallowed. So if you have not deducted, it is deductible but not deducted, then disallowed 100%. Second, deductible deducted also, but it is not paid before the due date under 139(1). Then it is allowed in the subsequent year in which the issue is rectified. How much is disallowed? Full 100% is disallowed. But will it be allowed in the next year? Yes. Yes, 40A1. Then what is 40A1A? 40A1A is what? Any sum payable. Any sum payable. Payable includes paid also in this because of a Supreme Court decision. And 40A1A is only for resident, not for non-resident. And what is the component and condition? Same as 40A1, no change. Deductible but not deducted, deductible deducted but not paid. What is the amount of disallowance? Amount of disallowance is 30%. 30% of the expense will be disallowed, not 100%. Right? 30%. So basically, for example, in 40A1A, let's say, A Limited makes a payment to the auditor, PJ and Company, 20 lakhs. They forgot to deduct TDS 2 lakh. So it was TDS deductible but not deducted. What will happen? A Limited, because they have not deducted now, they will be called as SSE in default under section 201. And penalty will be under 221 up to the TDS amount. Up to the TDS amount, 2 lakh rupees will be the penalty. Then under section 220, there is 1% per month. They have to pay interest, or the penalty they have to pay 1% per month. This is the problem. How can I not be called as SSE in default? A Limited was supposed to pay to the auditor 20 lakh minus 2 lakh, but they have forgotten to deduct TDS. So what is when will the trigger come? Deductible but not deducted. So here it is deductible, but have I deducted? No. So am I SSE in default? Yes. Right? So I'll be called as, in this example, A Limited will be called as SSE in default. Now how do I avoid that? So one more provision is there, my dear friends. You can avoid that if the following conditions are satisfied. First, A Limited has to go to PJ auditor and say, bro, don't take your income as 18 lakhs. Please take your income as 20 lakhs. Who's the payee here? PJ Limited is PJ, that is auditor firm PJ and Company is the payee. I have go to PJ and say, bro, please take it as 20 lakhs. Okay, bro. Second, tax on that 20 you have to pay. No, in fact, it was supposed to be had to deduct, but you have to pay now. Have you paid tax on 20? Yes. Second, have you filed the return of income? Yes. Then I have to take a certificate from a chartered accountant saying that in form number 26A that all the provisions have been followed properly. Only if all these conditions are met, then my dear friends, deductor is not called SSE in default. 221 and 220 will not come, but another section will come under 201(1)A. 1% interest per month from the date of deduction where it is deductible till the date when PJ and Company will file the return. So an interest will be there from date of deduction till the date when PJ and Company will file the return. Okay. So if you see, that is the thing. So let's take one example to understand again in a better way. This case scenarios. Tax is deducted and paid on 22/2/2022 within the relevant previous year. Deduction is allowed in 21/22 only because it's deducted and paid. No problem. Tax is deducted on 22/2/22 but paid on 12/7. Still deduction is allowed in 21/22 because it is paid before the due date. Paid before the due date. Miss Smiley, non-resident. Tax deducted on 22/2/22 but paid on 11/11/2022. Guys, this is after the due date. Hence, it will be not allowed in 21-22, but will be allowed in 22-23. Tax deducted on 14-22 and paid on 34-22. Deduction is allowed in 22-23 because it was deducted and paid only in 22-23. That 14-22 deducted, 34-22. Tax deducted on 14-22 but paid on 34-23 next year. The deduction is allowed when it is actually paid. When? 23-24. As tax was remitted only in the previous year, 23-24. Tax was not deducted or remitted at all. Deduction is not allowed unless conditions to avoid disallowance will be fulfilled. This is regarding 40A and 40A 1A. And 48.2, as I told you, income tax, section A 48.2, any income tax paid will not be allowed as a deduction. And 48.3, very interesting point. Any salary payable outside India or to a non-resident in India shall be disallowed if tax has not been deducted or paid before the due date. The due date for April to February will be 7th of the subsequent month. If you have not paid, if you have not deducted and paid on 7th of the subsequent month, permanent disallowance. It's not that later you can pay and allow, not allowed. From the month of March, you should pay on or before 30th April. So one interesting thing is if TDS is deposited late even by 1 day, salary paid outside India or to a non-resident in India shall not at all be allowed as a deduction. Even if TDS is not deducted but paid by SSC from his own pocket also, salary paid outside India shall not be allowed as a deduction at all. This is what the lawmaker says. Very, very interesting point. So for example, Dhanush is a resident, 10 lakh rupees he has to pay. Due date by Rajini Limited. Ultimately, in all these cases, Rajini Limited has to pay TDS by 1821, right? That is what, sorry, not 1821, they have paid it on 1821. So due date was 31/10/22. Year ended 31st March 22. Due date of the payee is 31/7/22. Filed by payee when? 31/8/22. The payee here is Mr. Dhanush. Dhanush has filed his return. Though he was supposed to file on 31/7/22, he has filed his return belatedly on 31st August 22. He has filed it within 139.4. Right? This 139.4 of the payee is well within 139.1 of Rajini. Rajini is the SSC. So these type of questions will come, guys. Right? So when will I not be called SSC in default? I was supposed to deduct the TDS on 1/8/2021. I have not deducted. Okay. I was supposed to deduct on 1/8/21. I have not deducted at all. I have given full 10 lakhs to Dhanush. Dhanush has filed his return belatedly on 31st August 22. Question is, belated return under 139.4. Will it still be valid and will it make Rajini not an SSC in default? The answer is yes. Because very interestingly, my dear friends, in section 201, they have told you will not be an SSC in default if the payee, who's the payee? Dhanush, has paid it within section 139. That is the dialogue. They have not told within section 139.1. They have told within section 139. 139 includes 139.1 also, 139.4 also. So very important point. Rajini could have, Rajini's due date is 31/10/22. And Dhanush should pay not within his due date. Dhanush should pay within the due date, not under 139.1. He should pay within 139. And 139 is belated filing. Belated filing you can do till December. So here he has done on 31/8/22, which is well within the 139.1 timeline of Rajini. Well within the 139.1 timeline of Rajini. So this part is allowed, no problem. So Dhanush, no disallowance, 2011A, 1% per month I'll be charging from 1/8/21 to 31/8/22 till the date when I've already given here, till the date when the payee files the return of income. When did the payee file return of income? 31st August 2022, like that. So this is regarding what? 40A1A, 40A1. Now we'll have to go to recovery of expenditure. Recovery. If any expenditure is recovered, bad debts we have already seen, but if any expenditure is recovered, will it be taxed or not? Coming to section 41, 41(1)(a) and 41(1)(b). 41(1)(b) speaks about succession, which we have already seen here. We saw 36(1) and 41(1)(b) here already. Succession. Here we are talking about 41(1)(a). 41(1)(a) says there has to be an allowance or a deduction. So guys, this is nothing but recovery of expenditure. If I have made an expenditure today and tomorrow I have recovered it, means people have paid me back. So when I have made an expenditure, I would have debited to P&L account. And when the money is coming back to me, then it will be P&L account credit. So any allowance or deduction, that is a loss or expenditure or a trading liability. Allowance or deduction. What is allowance or deduction? It's either a loss or expenditure under point A, trading liability under point B. Right? And I will receive anything in cash, right? Or any benefit. Either I'll receive any cash or any other form in kind also. And in kind again it's covered separately, leave it. But here let us discuss in cash. Cash if I have received or any benefit if I have received, then it will be deemed to be the profits and chargeable to income tax. Any allowance or deduction. Allowance or deduction means what? There should be a loss, expenditure, trading liability. Loss, expenditure, trading liability. So loss and expenditure can be recovered. See, that is called recovery. So loss and expenditure, if I have debited to my P&L account, if it is recovered tomorrow, that will be taxable. Similarly, if there is any trading liability, it happens to cease or remit. Cessation or remission of a trading liability. Remission means what? Accepting lesser fulfillment of the promise. If I have given you a loan of 10 lakhs and charging you 10% per month per annum interest and give you a repayment time of 3 years, what is remission? Same 10 lakhs I'll keep. Instead of 10% per annum, I will give you a reduced rate of 7% per annum. Or I will keep the 10% per annum, but I will timeline, if it is 3 years, I'll make it 5 years. Or instead of 10 lakh, I will give you some discount and I will say make it 7 lakh rupees at 10% per annum for 3 years, like that. So any cash, any benefit, and benefit is what? Cessation or remission of a benefit or recovery of a loss or expenditure. It will be deemed to be profits and it is chargeable to the income tax in that particular year when you receive the amount. So if you see 2018 expense account 2 lakh, that is there in the accounts and if it is paid also, but what is allowed as per Income Tax Act is 1.1 lakhs, assume. In 2021, I have recovered 2 lakh rupees. What will be taxable? Guys, how much was debited? 1.1 lakh. How much I am receiving now? 2 lakh. But how much was allowed to be debited before? 1.1. How much am I receiving? 2 lakh. So what is taxable? Only 1.1 lakh because what was debited? Any loss or expenditure has been recovered. What is loss or expenditure? 1.1. How much is recovered? 1.1. Extra 90 lakh is not taxable because I have already not considered it in the debit. There, right? Yes. Similarly, cessation or remission of a trading liability means what? Expense account debit 2 lakh to payable account 2 lakh in 2019. In 2022, I will reverse the entry. Payable account 2 lakh to P&L account 2 lakh. This is called cessation of liability. The liability has ceased. On the other hand, remission. Remission means what? 2019 expense account 2 lakh to payable account 2 lakh. Allowed is 1.3 lakh. Now what I will do, 1 lakh I will reverse because that fellow, I will go to that guy and says, look boss, 2 lakh, instead of that 1.3 lakh you give a discount, 70,000 only I'll pay. If he agrees to that, I will reverse 1 lakh rupees, assume. Out of 2 lakh, what was allowed only was 1.3. In that, I'm reversing how much? 1 lakh. So if I'm reversing 1 lakh, that 1 lakh will be taken to be remission. Right? So first entry is what? Expense to payable, 2 lakh, 2 lakh. How much is allowed? 1.3 is allowed. 70 is disallowed, that you leave. How much I'm recovering? 1 I'm recovering. What was debited to P&L account? 1.3. How much I'm crediting? 1. So what is taxable? 1. 1 lakh is taxable. That is called remission. So cessation and remission, some hidden points. Cessation, remission of a time barred debt, barred by the law of limitation, LOL. Barred for, basically any debt will be barred by the law of limitation if you don't ask for the repayment within 3 years. So basically within 3 years you have to initiate the process of recovery. So it will be called a time barred debt if it is fully written off, whether unilaterally or not, 41(1). Whether you have written it off, whether unilaterally, not unilaterally, whatever it is, anything written off will be taxable under 41(1). What if it is not taxable? If it is not taxable under 41(1), if it is not written off, if it is not written off under 41(1), if it is not written off earlier in the account, 41(1), it is not considered as a income. So, for example, if I have a bad debt, I have written off the bad debt. It's a trading liability, let's say, bad debt written off. So today, if it is taken as bad debt, it will go to 41(4). But here I am talking about a time barred debt. And basically, after 3 years, I have to write off the time barred debt. It no longer exists as a valid contract. So after 3 years, if I didn't follow up with that person, that I will not get that money, I will write off. Unilaterally, I will write off. Tomorrow, that fellow will come and pay me the money. Yes, that is recovery, 41(1). If I have not at all written off, then 41(1) will not come. Where should I write it off, my dear friends? It should be written off in the accounts. Mind you, it should be written off in the accounts. Purchases to creditors, 2 lakh, 2 lakh. Then creditors to P&L account. So I will write off. Write off means write back, so to speak. So creditors 2 lakh to P&L account, 2 lakh. Now this 2 lakh, when I am reversing, no, that is called writing back or writing off only. It is called in the exam, but it's called write back. So purchase to creditors 2 lakh, 2 lakh. Creditors to P&L account 2 lakh, 2 lakh. So P&L account is called what? Writing off or writing back in the account. So will this 2 lakh be chargeable to tax? Answer is yes. Sir, I have not written back to P&L account. I have written back to reserves and surplus account. Guys, the lawmaker uses the word, it should be written off in the accounts. So even if it is written back in the reserves and surplus account, important point MCQ. Even if it is written back in the reserves and surplus account, it will be taken to be time barred. And it is chargeable to tax under 41(1). Waiver of loan. If I have taken a personal loan and waived off, basically somebody has waived off my personal loan. It is like an income for me. Under 41(1), it will not come because it is not a cessation of a trading liability. It's a personal loan. But under 56(2)(10) IFOS, gift taxation, it will be applicable. Similarly, business loan, if it is there, if it is, if I have received any business loan and if I have received a waiver of that loan, that will be a benefit. So it will be considered as an income, trading receipt, taxable as a benefit under section 28 because 22, 24, 18 speaks about this thing, any benefit that you have accrued. Similarly, 28.5 also speaks about any benefit accrued. Any benefit received will be taxable under PGBP as a trading benefit. TV Sundaram Iyengar, Supreme Court decision. If I have waived off a working capital loan, generally there is no entry for working capital loan. What will be the entry? Salary to CC account, purchase to CC account, like that. There is no separate entry for taking a loan as such. And tomorrow, if that loan is waived off, I have already debited salary. This is like a payable account which I have to pay to the bank, but now they are waiving this off. Yes, it will be taxable under 41(1). What about waiver of a term loan? I have taken a term loan and bought a capital asset. Tomorrow bank is telling no need to pay the term loan. So guys, if that be the case, it is not a trading liability. 41(1), it will not come. The Steel Authority of India says very clearly that you should subtract from the actual cost. These are very, very important adjustments that I am telling you. And mind you, this is a marathon session. In my regular batch, this only I did for 3 hours explaining why of each of these things. But now we do not have the time. Just whatever I've written out, you just remember and go. Okay. Yes. Right. This is, you leave, that's fine. Then there are certain things that are only based on payment, guys. All the expenses are allowed, which are given in section 43B, purely on payment basis. So certain expenses are allowed as a deduction only when the payment is actually made on or before the due date as per 139(1). So for companies, what is the due date? 31st October. If you're a TP case, 30th November. For an individual, 31st July. So all these areas are covered, only expenses are allowed only if payment has actually been made under 43 capital B. First one, any tax, duty, cess or fee under any law in force. Any tax, does it include income tax? No. Income tax is anyway disallowed under 40A2, 40 small a, small 2. So this tax will not include income tax. It will be any other thing. So we will see that. Then contribution to any provident fund or superannuation fund or gratuity fund for the welfare of the employees, if you have created, correct, any contribution to them, if it is not paid to the respective fund before the due date of filing the return of income, then it will not be allowed in that particular year. When it will be allowed? It will be allowed in the year in which you have actually made the payment. Then any bonus or commission to employees, any interest on any loan or borrowings from public financial institution, SFC, SIIC, then deposit taking NBFC or systematically important non-deposit taking NBFC in all these cases. Any interest or loan on advance on scheduled bank or cooperative bank, leave encashment, any payment made to Indian Railways. All these things, just like that, if you read, nothing will understand. We should go in depth into each and every item and understand what you mean by tax, what is meant by cess, what is meant by duty and all those things. So clause number A, they have spoken about tax, duty, cess. Income tax is not covered because income tax is already disallowed under 40A2. So 43B will not at all apply. So what do you mean by tax here? You can take the example of sales tax. You can take the example of interest on sales tax also. Interest on tax also will be forming part of tax only. This was held in Mewar Motors. Also GST will be taken into account, GST expense. The journal entry should always be, if for example, there is a 2 lakh rupees sale and GST of 18%, 2,36,000. What journal entry will you use? Is it bank account 2,36,000 to sale 2 lakh to GST payable 36,000? No. It should be bank account 2,36,000 to sale 2,36,000. GST expense 36,000 to GST payable 36,000. This GST payable will be allowed to be debited. This GST expense will be allowed to be debited if payment is made before the due date. GST expense, GST payable 36,000 will be allowed to be debited, or rather will be allowed in the tax books only if the payment is made on or before the due date. That is 31st October. Municipal tax, house municipal tax, that is for resident, that not residential building. Here commercial building municipal tax will be taken into account. Duty will include excise duty. Cess will not include secondary and higher education cess because it is already covered where? It is already covered in the tax portion. Whenever I say income tax, it will include cess, everything. So when income tax along with everything is anyway disallowed under 40A2, this will not include secondary and higher education cess. This may include something called as R&D cess as per the R&D cess Act. Then any fee, any statutory fee, any fee that you can think of, any other ROC filing fee, all that will come under this particular fee definition. Then one more thing was there, if you remember in 43B, interest on borrowing. So as far as interest on borrowing is concerned, that is all clause D, E and F. Loan taken from PFI, State Financial Corporation, SIIC, Scheduled Bank, all the interest when I am repaying, it will be allowed only if it is paid before the due date. Personal money lenders, etc. are not caught because anyway they will not allow you to delay so much. They will come with their entire battalion to your house to throw you out and throw all the stuff in your house. Then cooperative bank, excluding agricultural society, all these things will be taken into account. Deposit taking NBFC, systematically important NBFC, that is total assets more than or equal to 500 crore in as per the latest audited balance sheet. All that will be taken into account. What about interest if it is converted into a loan? Will it be taken as deemed to be repaid or will it be taken as not paid? What do you think? For example, I had a loan of 100 lakhs, interest was 10 lakhs. That 10 lakhs was not paid to the bank only, but it was added to my loan. It became 110 lakhs. Now that extra 10 lakhs, is it deemed to have been paid if it is converted or not? There was a huge issue. Many, what do you say, High Court judgments told that payment will be the payment as on the date of conversion. To overthrow the judgment, explanation 3C, 3D and 3CA were added. They said conversion not deemed to be payment. So to escape this, SSEs used to get interest converted into debentures because it's only had loan in the section 43B. That also was removed in Finance Act 22. They added the word debentures also. So guys, as per 3C, 3D and 3CA of section 43B, if you get the interest converted to loan, if you get the interest converted to debentures, it is not deemed to be paid before the due date. So basically disallowance will get attracted. But if I pay the interest portion, is it repayment of loan or is it repayment of interest? So then the government made it very clear, it will be repayment of interest. So if there is a 100 lakh loan on which 10 lakh is the interest 110, tomorrow if I repay, let's say 8, of which 6 is towards interest and 2 is towards principal. This 6, though I am repaying the loan here, this 6 will be deemed to be repayment of interest. And then in the year in which you pay it, it will be allowed. These are all very, very important points. Then we'll do a master chart on employer's contribution to gratuity fund, GF, if and all other funds as well. Any contribution to recognized gratuity fund or approved gratuity fund is covered under 3615, read with 43B. It is allowed only on payment basis. If I make a payment of beyond 20 lakh rupees to an employee from recognized gratuity fund, if the TDS has been deducted, under 40A4, it will be allowed. And under 40A small 2, I will allow it only if the TDS has been deducted and paid on time. Else 30% will be disallowed. Then under 43B, TDS is not an expense. So even if you don't pay it within the due date, it's okay. On the other hand, the TDS has not been deducted at all, and 100% it is disallowed only. Definitely it is disallowed directly. No 43B, because under 40A4 only it is disallowed. I hope you are understanding. 43B will not come because under 40A4 only it is completely disallowed. Provision made for gratuity under an unapproved fund, as already discussed, under 40A capital 40 capital A7 only it is disallowed. Hence 43B will never apply. All the gratuity related points I am bringing into this master chart. Provision for gratuity becoming payable in the previous year. 40A7B says no disallowance because it is becoming payable in the previous year. I told you 40A7 unapproved gratuity fund is disallowed. When is it allowed? When it actually becomes payable or if it is approved. Here it is allowed on accrual basis because 43B only speaks about whatever expense you have there, which is contribution to any fund. 43B clearly speaks about contribution to provident fund, superannuation fund, gratuity fund, or any other fund. It is not a book entry. If I just make a provision for gratuity payable to the employees, that is gratuity expense or gratuity payable account, not to a fund, then 43B will not come because it's just a journal entry and not contribution to a fund. Only if it is transferred to a fund, then 43B disallowance. This one, see, Recognized gratuity fund, only then 43B disallowance will come. Then setting up formation and contribution to unapproved gratuity fund. So if I set up, form and contribute to an unapproved gratuity fund, as we have already discussed, 40A9 there is disallowance, 43B will not come at all. Then as far as provident fund and other welfare funds, all this is linked to 43B. These are all master chart which you will never find anywhere, mind you. Created by me after hours of research, seeing various sections, right? It will really help you in the examination. Provident fund and other welfare funds. Employer contribution, recognized provident fund or approved fund, 3614 plus 43B. It will only come on payment basis. Payment to provident fund to employee less than 5 years. Guys, if I make a payment to that employee for less than 5 years, for him, it will be taxable. If I have deducted TDS, same as A, same as this A. 40A4 it is allowed, deducted, otherwise 30% disallowance, same thing. If TDS is not deducted, then it's a problem. 40A4 disallowed, directly there only it is disallowed. Under 40A4, concept of 43B will not come. Concept of 43B will not come. 43B will only come if it is a recognized provident fund paid after 5 years. Recognized pension scheme, if I pay less than or equal to 10% of salary, there is basic plus DA, 3614A read with 43B payment basis. If it is more than 10% anyway, it is excess is disallowed anyway. In a recognized pension scheme, they have clearly told only up to 10% is allowed. If it is more than 10%, anyway it's disallowed. When it's anyway disallowed, 43B issue only will not come. Employees' contribution on the other hand, guys, is always treated as an income under 22410. An expense is allowed 3614A if credited to the fund on or before the due date. So this is employees' contribution. As I told you, from the employee they will remove, no? That portion will be treated as an income. So from salary, if I pay 10 lakh, 1 lakh will be taken out and given as an employee contribution. So that 1 lakh will be treated as an income because there is a corresponding 1 lakh also paid. It should be credited to the fund on or before the due date. What do you mean by the due date here? Is it the return of income due date or payment as per relevant laws? It went to various cases and eventually they said it is payment as per the relevant laws and not the return of income date. So if deposited 1 day late also, let's say as per the relevant law, it is supposed to be 7th of the next month. Even if I deposit 1 day late, 8th if I deposit, then permanent disallowance. Permanent disallowance. Grace days are definitely not allowed. No grace days are allowed anywhere. Absolutely not allowed. So that completes the discussion on 43B. Now what is left is scientific research 35, then specified business 35AD, and other miscellaneous provisions, presumptive taxation and all those things. So that we will eventually do.